Hello, everyone. Let me just check there. Okay, there's only one participant so far. Could just wait a few minutes for everyone to log in. Okay, so we have 5 attendees so far. Hi, everyone. Good evening, afternoon. I don't know if it's anyone who's in the morning apart from the US. How is everyone doing? Please write in the chat how you're doing, how your day is going. Welcome to today's webinar. So I'll be your moderator. My name is Phoebe Msonda, and I am the regional coordinator for Central and Southern Africa. I'm based here in Lusaka, Zambia. Hi, everyone. As you are coming in, please introduce yourselves and where you're coming from. And we'll give ourselves 2 minutes before we introduce the presenter and get started. Okay, I see Charlotte from Cameroon, Portia from Botswana. Please introduce yourselves and where you're coming from. I've seen Leju from South Sudan, Clifton from Zambia, Christabel Simuyu, Kenya. Okay, so everyone else, even as we wait for other people to join us, as I said, my name is Phoebe Msonda. I am the regional coordinator for Central and Southern Africa. I am based here in Lusaka. I'll be your moderator today. I'll introduce the presenter now because we are, give me a minute, we're 4 minutes into the start mark. I'll read the presenter's bio almost verbatim so that I don't miss out anything. Give me a minute to open his bio. Okay, today's presenter is Mr. Fulgence. Please forgive me if I butcher your name. So his name is Mr. Fulgence Mbituka Ndilo. He is a finance and accounting professional with 10 years experience in a multifaceted experience in accounting, finance operations, and internal and external processes improvements with an international institution. He is an expert in executing team-driven processes improvements to increase revenue growth, operational efficiency, and overall profitability, known for implementing or automating systems that significantly improve operations, impact business growth, and maximize profits. Unrelenting bottom line driver, known for exceeding ambitious goals by uncovering game-changing opportunities. His goal is to become a valuable mutual asset by providing efficient, strategic management expertise that will contribute to organization success and develop his skill set further. His education includes a Bachelor of Commerce in Accounting, Commerce and Accounting from Kenyatta University, a Master of Business Administration, Strategic Management, United States International University. He's currently pursuing his PhD, Accounting at Jomo Kenyatta University of Agriculture and Technology. He's a member of the Institute of Certified Public Accountant of Kenya. Currently Principal Accountant, Students Accounts at United States International University, Africa. So that's our presenter. So he has great experience which he wants to share with us. So everyone, please welcome Mr. Fulgence Ndilo. You're welcome, sir.
Good evening, everyone, or good afternoon for those who are outside East Africa. Welcome for this webinar, and I'm going to take you through matters finance and how you're going to manage your finances in relation to your businesses. Thank you very much. This is a new norm whereby we do our webinars online. How I wish we could be having this session face to face so that we can interact and make this webinar more live and more interactive. However, with the aid of Phoebe, we are going to have that interaction through the chat. So in case you have any clarification or any questions, kindly don't hesitate to pose your question or your challenge through the chat area. Thank you very much. Allow me to share my screen on my presentation. I hope everyone is able to see.
Yes, please, we can see.
Okay, so we can proceed. So today I'm going to take you through basically managing your business finances. And at the end of this lesson, I'd like you to at least explain the importance aspect of financial planning. We're going to see how you're going to plan for your business and planning for your finances. Secondly, we are going to be able to know the responsibility of being a financial manager, because I understand you're going to be a financial manager of your own finances or of your business finances. So for that, you're going to be a financial manager and look on your responsibilities. Then next, we shall be able to differentiate the different types of budgets in managing your business finances, because you're going to share and check the kind of business budgets which you are able to have as a business person. And lastly, be able to describe the types of financial records which businesses used. We're going to look at the balance sheet and all those kind of financial records. So I may pose a question. Why is financial plan important to a business person or to anyone? You can be a student, and as a student, you may need the financial plan. And financial plan is basically a budget. So if anyone can answer through the chat the importance of having a financial plan. Anyone? One is saying guides expenditure through prioritization of your needs. Very correct. Proceed. Let's make this so interactive so that we are able to learn. Yes, it helps you to be in control of your income. Yes. The last one. Help in decision making. Very true. So all these, they are the importance of financial plan. The kind of money anxiety. If you have a financial plan, you don't have that kind of money anxiety. We have some people whereby when they receive a check of a certain amount of money, they are not able to cope with it, and they're going to have that kind of anxiety. And if you have that kind of anxiety, you're going to spend your money anyhowly without having any major plan. We have someone who says it helps manage one's finances and outlines how profit and losses will managed. Again, for better management to avoid overspending or spending unnecessarily. That is all about the financial anxiety. It tells you about the direction of your finances. Very true. It does tell you that. So every large or small businesses, they must have a financial plan. that is a budget, right? And this will assist you to manage the financial resources. These are some of the keywords which you are going to encounter. So don't shy off when you see them. We have financial plan, assets, financial forecast, accounting, financial manager, budget, fiscal year, owner's equity, income statement, and balance sheet. Any one of you who is not aware or does not know any of these keywords, I understand most of you have some little or you have some on either business, accounting, or finance. So I don't think any one of you doesn't have any knowledge about these terms: financial plan, assets, financial forecast, accounting, manager, budgeting, fiscal year, owner's equity, income statements, and balance. So we're going to look at the aspect of the financial management. So basically, financial management, it involves putting together financial plan and keep track of income and expenses. And as we can see, we are going to see later during this talk or tomorrow, when we're doing fully budget scenario, you can see that when you have your budget or you have your plan, it's just a guideline for you to be able to achieve your vision or for you to be able to achieve your goals. So having a financial plan does not mean you cannot over or underspend. It's just a track to ensure that you reach the destination where you want to. So you can overlap so that you overspend or underspend on your budget. I like to do a small assignment with everyone whereby you want to see your financial identity. And basically, you're going to give yourself 3 points in each of these traits. So for instance, if I'm cautious, I'll give myself 3 points. If I'm cautious, I'll give myself 0 points. So every one of you should take this test because we want to see your financial identity as a person. The first one is I like meeting people. So if you like meeting people, give yourself 3. And if you don't like meeting people, give yourself 0. All right? Everyone, we're together. Secondly, if you're friendly, give yourself 3. If you're 3. And if you're not friendly, give yourself 0. And let's be candid enough. Don't try to give yourself points so that you fit in a certain identity. Let's be very candid enough so that we see in which identity you feel or you're going to fall into. The third one, I try to avoid conflict. So if you try to avoid conflict, give yourself 3 points. And if you don't try to avoid, you don't fear any conflict, give yourself 0. Then I like to spend time alone. Give yourself 3 if you like to spend time alone. And if you're not, give yourself 0. If you like to talk like me, give yourself 3. Otherwise, give yourself 0. Are you sensitive? If yes, give yourself 3 points. If you're not sensitive, give yourself 0. I'm interested in other people. Yes, if you're interested in other people, give yourself 3 points. If you're not interested in other people, give yourself 0. Are you an upbeat? Yes, if you are an upbeat, give yourself 3 points. If you are not, give yourself 0 points. Are you enthusiastic? Give yourself 3 if you are. If you are not, give yourself 0. If you like to be proactive or active, give yourself 3. And if not, give yourself 3. I have perseverance. Give yourself 3 for that. If not, If not, give yourself 0. I'm persuasive. Give yourself 3 if you are persuasive. If you are not, give yourself 0. If you are ambitious, give yourself 3 points. If you are not, give yourself 0. Do you like to feel in control of anything? Give yourself 3 points if you feel to be in control. And give yourself 0, sorry, if you don't like or you don't feel like being in control. And indeed, if you like to plan your things, and remember, planning starts at home. The first thing when you wake up in the morning, I presume you're supposed to make up your bed. So if you like to plan, give yourself 3. If you don't like to plan, give yourself 0. If you're an organized person, or basically you like organizations, give yourself 3. Otherwise, give yourself 0. Do you like to be a center of attention? Give yourself 3 if it's a yes. If it's a no, give yourself 0. Do you let other people do what they want? Give yourself 3 if you do let other people do what they want. And give yourself 0 if you don't let other people do what they want. Why are we doing this? Your personality or your financial identity basically helps you guide on your future. And it basically guides you on the kind of a planner you are. How are you going to do your planning? Right? So basically, write 10 characteristics that best describe you. Right? Right? So remember, we've answered all these questions, giving yourself 3 and 0. So out of this, kindly pick the best 10 which describe you. So let's assume you are friendly, you are cautious, you like to talk to people, you are sensitive. So out of these, pick 10 with their marks. So if you are persuasive and you're giving yourself 0, pick persuasive 0. If your description is you want to be active and it's 3, give yourself 3. Right? So out of this, pick the best 10 which best describes you. Right? I hope everyone has done that assignment and you have the 10 questions which describes you perfectly. So based on your score, I think we do have some of you who are going to score between 24 to 30 points. And you are a kind of persuader. So for you, I assume you should consider a career or somewhere where you sit to be able to do sales, or field where you can influence people. Because you are able to persuade people, so you are a persuader, right? Anyone with 24 to 30 points in their score sheet? Any two? I like to see the persuaders. As they chat in their chat box, the persuaders, we can look at people scoring between 15 to 21. And these people, they are communicator. I can see Clinton Chifue. I think he's from Nigeria, if I'm not wrong. Kum, also 30 points. These are kind of persuaders. So it means they're able to persuade people. Oh, sorry, Clifton is from Zambia. Anyone from 15 to 21 points, we see. These are communicators. So these kind of people, they enjoy activities where a team player working towards a common goal. So these are the kind of people who will work together with other people to make sure they achieve a common goal. Right? Anyone who is a communicator, as we lastly see the individualistic kind of people, who score between 6 and 12 people. And these are the kind of people who like to be independent. They like to do their work on their own. They don't like working as a team. Anyone who is a kind of an individual person or a communicator? I can only see Clifton, who is a persuader. I think we can proceed based on that. So what is a financial plan? What is a financial Clifton, are you able to share with us your knowledge on what is a financial plan? Kindly, Clifton. Sorry for picking you up, but I like this to be very interactive. As Clifton is typing, also any other person can give us what he understands. Sorry, I was disconnected. Clifton. Okay. Clifton think it's a strategic document that outlines income and expenditure for the organization. So basically, a financial plan is an outline of your expenses, needs, and goals, and how you expect to meet them. And we can see, and we are going to see when we look on how you are going to plan your finances, you're going to see how are you going to differentiate between your needs and wants. And one of the requirements of setting your plan is setting a goal. Because without a goal, you cannot set any plan. And remember, when you're setting any goal, it's supposed to be a SMART goal. And we are going to see what being SMART goal is all about, right? So basically, it's what we've said. It's an outline of the expenses, need, and goals, and how you expect to meet them at a future time, right? So with the financial plan, you're able to know how much am I having as income and how much am I going to expense it, so that to enable us, the business or our daily activities are being run smoothly, or the operation of the business are being run smoothly and okay, right? You also need it to explain how you are going to cover the expenses. Because the plan, if you have income without having a plan on how you're going to expense it, trust me, at the end of the year, when you look back, you'll not be able to figure out how you've utilized your income. So it's very, very useful for you to have a clear plan on how you're going to use your. You guys are students, and at a certain time, you're going to be entrepreneurs. You're going to start your own business, or you're going to be employed at any organization. And for sure, in any organization, you must plan for those finances, right? And as an entrepreneur, when you're going to set your own business, you're going to search or going to look for adequate funding so that you're able to start your entrepreneur business. And you're going to do that, but first, identifying your assets. You must identify the asset which you need in your business. So for instance, if you're setting a business, the first thing you'll ask yourself, what am I required to have as an asset to start this kind of business, right? And of course, an asset is any item that business owns. It can be a building, it can be a chair. So basically, these are the kind of things as a business person you're supposed to identify. What will I need as an asset to start my business, right? And we are doing this, you must do a very good research on the options available. So for instance, if you need an office or you need a building, first and foremost, you have to do your research and make sure to understand first your clients and the kind of business you're having. So for instance, if you need that kind of office, you'll ask yourself, is the location which I want, be it near to my clients? Because you need to take the office near your clients, because your office will determine how you interact with your clients. So before you do anything, kindly note, you are supposed to do your research very well. Doing your research, you're also able to compare prices. For instance, if you want to buy a computer and you know the requirements, the specifications of the computer you want, you have to do the research. You have Dell, you have HP, and all those other computers. Research their lifespan. How long are they going to last with you? That is one. Secondly, what is the price aspect? Right? And for this, they'll be able to assist you in planning. Right? So that you just don't go to the market and brought a laptop that you are not able to utilize or is not able to suit your entrepreneurship needs. Right? So the first thing is identifying your assets. After identifying the asset and you've done your research well, the next thing is purchasing the assets, right? So how are you going to acquire this kind of item? And remember, we are not going here now. We are starting to come up with a plan. So it's not about asset alone. It's about of purchasing you like to do, right? So the first thing is identify the need. What do you want, right? So once you've identified what you want, do your market research well on the item. And while doing that, you are able to compare the prices, the specifications, and all those details of the items you need. And after doing the market research, now you are able now to make a decision on how to purchase, right? So from that, you have to make the decision, and the kind of decision now is the purchasing decision now we are talking about. How are you going to purchase? Are you going to use an installment kind of plan whereby you pay in installment? Are you going to hire the asset? All right. So in the kind of research when you're doing, you're able to compare. If I hire or I rent a house, and when I build my own house or my own office, what is the difference in pricing? What is the cost implication? And all that research will lead you in these purchasing decisions, which will assist you to know, are you going to have the higher purchase? Again, you have to analyze, you check the higher purchase model vis-a-vis the kind of you pay at once, the cost implication of it. And this will help you decide how you are going to purchase the kind of asset or what you need in starting your business. Right? So also this one, it also depends on the kind of investment in terms of money you have. So if you have limited resources, again, it will make you decide otherwise in making some decisions. For instance, if building a house costs you 10 million Kenya shillings, why should you go for building a house while renting will give you a lower pricing or a lower expense. However, in the long run, it will cost you more, but the limited resources will help you making this kind of purchase decisions, right? After purchasing, you have to look at the accounting requirements, right? And financial records is one of the important things in financial planning. Ensure that you have a financial records in any way. Any purchase you make, ensure that there is a record. And this will help you understand how, understand and able to trace your planning and your budget. Because if you don't have any financial records, trust me, it will be very hard for you to track your plan. So ensure that in any purchase you make, ensure that you have that financial records with you. You can open a file whereby you put physical records. We have application whereby you scan, right, for those records. And ensure that for you, most of you, you don't have that muscles for having an application whereby you can have these records. You can use a simple Excel worksheet whereby you put your financial records. Towards the end of the lessons tomorrow or today, we can be able to see how we are able to put these financial records in a simple Excel. And one of the account requirements is about forecasting. And when you're planning, you're supposed to forecast. You're supposed to see how much sales am I going to make as a business person. How much sales am I going to make? You are going to estimate based on the assets you have, based on the financial muscles you have. You're supposed to estimate the sales. You're supposed to estimate the kind of expenses which you are going to incur. So focusing is one of the most important things in planning. Because you cannot plan for the future if you don't have a focus. Even the weatherman, they focus for the weather so that they know tomorrow. Are you able to carry your umbrella when you go to work? Are you going to wear a cardigan when you go to work based on the forecast of the weather? The same way in the business. You're going to see in the business is affected by internal and external factors. Yes, you have control of the internal factors, but you don't have control of the external factors. So, because of the external factors, there is where now you're going to focus. You don't know how many people are going to buy your product. For that, you're going to focus. You don't know how the government is going to increase or reduce taxes, but you have to focus, right? So all these factors, they are going to affect your business. And for that, you need to focus. We have this kind of graphic organizer, which I came about with. It's all about the elements of financial planning. And it's what I've been talking about since the beginning. And first, you're supposed to have goals, right? As a business person, you're supposed to have goals. Without goals, you can't have any financial plan. Because your financial plan is geared to attaining your goals. Then you're also supposed to do your asset analysis. The kind of things, these are the tools, just like a driver or a person who wants to go from point A to point D. He must analyze the kind of transport he's going to use. So as a business person, the assets that they transport, which they're going to carry you to achieve your goals. So ensure you analyze your assets. Because if you don't analyze your assets, you're not going to reach your goals. All right? And remember, it's just like a journey. Financial planning is all about planning for a journey, attaining your goals, attaining your financial goals, attaining your business goals, attaining your personal goals. And the vehicle which is supposed to take you to achieve this financial goal is your assets. So you have to analyze very well. What are these goals, which these assets, which you're supposed to have to make sure they make you attain your goals? And once you have analyzed all your assets, now you are going to have your financial forecast. And forecast, as I've said, it will help you attain your goals because they are going to interfere with your assets and your journey. And in this, you'll see that I'm trying to compare it with a journey. The same way, when you're having a journey, maybe from Zambia to Kenya, you're supposed to have a focus of what's going to happen between Zambia to Kenya when you're having your journey. There might be, of course, the issue of weather. So in case there are going to be either weather patterns, they are going to change. Of course, if you're coming to Kenya and you're coming out of a country whereby it's a cold country and you're coming to Kenya, whereby it's warm here in Kenya, so it means you're going to carry clothes which they're related to warm kind of weather. The same way on your financial forecast. The financial forecast will help you gear or achieve and adjust your assets to reach your goals. Then the next thing is projecting your income. You've known the assets, what is needed for you to be able to attain your business or your organizational goals. So you're supposed to project your income. Where are you going to get your income from? And I'll pose a question. As individuals, where are you going to get your income from? Yes, you can get loans. Yes, you can get donations from friends, family, from well-wishers, right? So any other kind of income from you guys? Any type of income from you guys? Portia, I hope now you're okay. You're not buffering. I think my internet is kinda not stable, but I think you can hear me clearly. Yes, I can see from salaries. Yes, from saving. Owner's capital. Yes, very correct. So all this you project. So you can project, yes, I have this income from my savings. I'm expecting that based on my financial forecast, I'm going to have an interest from my income or the interest from my savings at 9%. So that is the projection of income. Yes, income from investors. And those are, when you're having income from investors, remember that you're supposed to pitch your business idea. So if you're expecting income from investors, you're supposed to pitch your idea to investors so that they invest. So ensure that when you're pitching, I think you should have a lesson on how you're supposed to pitch your ideas to investors so that you have this kind of income from investors. The next one is projected expenses. Yes, we've projected our income. Now we are projecting our expenses, right? From your side, again, if you don't mind, we can share the kind of expenses from you guys as entrepreneurs. Anyone? We can have salaries for those who are going to employ people. We have recurrent expenses like electricity, water bill, rent, right? Right? Travel expenses, taxes, true. If you may allow me, I can switch off my video because I have a very unstable network, allow me to pause my video. Insurance, yes. Developing the product, yes, that is research and development. Legal fees, auditors fees, yes. Yeah, you guys, you have knowledge on businesses, right? Expenses, inquiring space, very true. Advertisement. So basically, those are the kind of expenses. Marketing, all that. So now remember, now we have the forecast, we have the assets, and we have the income and expenses. Now it's the turn now to project your budget. And remember that for you to have a projected budget, you are supposed to have all the other four aspects or elements which are shared earlier. So you must have a goal, you must have analyzed your assets and the needs, you must have focused your financials, you must have projected your income, you must have projected your expenses for you to be able now to have a budget. And we are going to have a sample budget on how you are going to have a clear budget or a simple budget. So let me take you back to the goals aspect before we now come to projected budget. I want to give you each and everyone an exercise which we are going to share. Maybe 2 or 3 of you are going to share with us this kind of exercise at the end of our lesson tomorrow. So I like every one of you to come with 2 or 3 goals. 2 or 3 of your financial goals. If you don't have any business, you can have your personal goals. But if you have a business goal or a financial goal, you can have. But basically, you can give me one financial goal or one business goal, one personal goal, and one general goal. Let's do this exercise so that we can work together. And remember, when you're setting these goals, as I earlier indicated, you're supposed to be smart. You're supposed to be smart. The goals which you're setting, they're supposed to be smart. And what do I mean by saying this? The goal must be smart. The S stands for specific. So we are setting the goal, it has to be a specific goal. Don't give us a general goal, a specific kind of goal, right? The M stands for measurable. M stands for measurable. So the goal has to be measurable, right? The goal has to be attainable. A stands for attainable. The goal has to be attainable, right? Let me type SMART. So SMART stands for specific, right? Measurable, right? Attainable, it has to be relevant, right? And lastly, it has to be time bound. So for instance, I can give you maybe an educational goal and say, I want to attain my master's degree in accounting, right, by 2025. So I have been specific that it has to be master's in accounting. Yes, it is attainable within the time which I've said. It is relevant to my field. and I can add at a cost of $1,000. It has been specific, measurable, attainable, relevant, and time bound. So when you're setting your goals, kindly make sure your goal is SMART, right? And you're setting your goals. You can have short-term goals and long-term goals. And short-term goals, they can last for a week to 6 months. And long-term goals, they can last 1 year, 2 years, and longer. But it's okay. You can set either long or short, but make sure the goals are SMART. After setting your goals, we go to the next stage. Analyze the assets. Analyze the tool, the vehicle, which is going to carry you to attain these goals. And this is where now you identify your needs and wants, right? And while you are doing this, you're supposed to know your values. Values shows that what is important to you. So again, when you're evaluating the analysis, the asset analysis, and understanding the needs and wants which you want, the assets which are going to take you to achieve your goals, ensure that you understand what is important to you, right? And know what is basic need and what is a want to you. And specialize or prioritize on the basic needs first, right? Then after that, you can focus, project the income, then you'll mention the kind of income which you're going to have and the kind of expenses which you're going to have. So ensure when you go to rest today, make sure you have this goal, the assets, your financial forecast, the income you've projected, the expenses you've projected to be able to attain the goals. And from there, we are able now to project the budget. Because the budget basically is the income vis-a-vis the expenses, right? And after projecting our budget or after having our budget, we are supposed to keep record of the plan and ensure that you follow the plan, right? Ensure that you follow the plan because this is a guide. This is a guide to enable you achieve your goals. So if you just have your goal and you have all these fantastic things on paperwork or in Excel, but you don't record and keep the plan, you won't achieve the goals. It's like having a plan on how you are going to travel. You've arranged your clothes, packed your clothes, do everything, but at the end, you don't travel. You've done nothing. So the aim of this presentation is to assist goals, because the end result here is to achieve your goals, right? Any question before we go to the next stage? Any question or any clarification? We've talked about why is financial, as you can see on your screen, why is financial planning important to our business and for you as a person? We've already talked about that, and some of you have given the correct answers on the chat. What are some of the examples of assets? We know, and I've given example. So any question before we proceed? Any question? And maybe I forgot, when you are setting your expenses, allow me to go back. Maybe I forgot to talk about projected expenses. Notice that, or you'll note that when you're projecting your income, you're supposed now to have fixed and flexible kind of expenses. And remember, that is what I was talking about. We have the recurrent expenses. So these recurrent expenses, they're the flexible kind of expenses, right? And this kind of expenses, they also vary from time to time. So you might find out the expense this month is 10,000, next month is 25,000. So again, this one, they change, right? And allow me to give you some expense categories and some tips when you're projecting your expenses, right? Or when you're trying to project your expenses. This one is out of this, but I understand most of you are students, and this one will be helpful to you. So, in expenses regarding to your education, right? Expenses in regard to your education or school, I'll advise you to find ways to limit costs, right? In your education or in school expenses. And how can you limit your cost or your expenses in school fees or your education expense? We have scholarships. Go for those scholarships. Don't shy off. Those scholarships, they are going to assist you in minimizing in the cost of your education, right? Go to residential assistance, right? We have school or universities which give resident assistant or work study, whereby you work in the campus and your fee is subsidized. Go for those things because they're going to assist you in cost cutting in your education, right? Then avoid debt as much as possible. Avoid debt, all right? And I'm told that most of you are out of school, but again, you have kids. You'll have kids, or you have family, and I think it will be important to you. So again, when you're projecting your expenses and you're having your business, you're supposed to have CSR, that is corporate social responsibilities, right? So when you are giving these corporate social responsibilities, find a way to be generous with your money, even if it's little. Ensure that you give back to the society, even if it's little. On entertainment, right? Prioritize what you enjoy most and eliminate or limit the rest, right? So if you're having an entertainment, when you're going out, ensure that you are gaining something out of that entertainment, right? If you're entertaining yourself through the phone, ensure that the time you spend with your phone is helping you generate some income. When you go out and having fun with friends, make sure when you're having fun with a friend, make sure you have interaction with other people and have a look on how you can invest. If you are going out, maybe you are going for a holiday, open your eyes in those holidays. See the kind of business ideas which you can incorporate them back into your business. For instance, if you've gone to South Africa and you've seen that there is a business in South Africa which is doing well and it's not doing well in Zambia, or it's not there in Zambia, and see how are you going to have this business operate in Zambia. So just don't go out or on a holiday just to have fun. Ensure, yes, you have fun, but also you are gaining something out of that holiday, right? On investment, you are young people. Try as much as possible you start investing as early as possible. Invest on your early ages. Because if you invest on your early ages, you are going to have enough, or the investment is going to be mature when you are relaxed. And the income will be higher as compared when you start investing at an old age, right? So I think I'll proceed on the next item. And remember, we've talked about accounting. Accounting is one of the most important aspects in your business. And I'll insist, as entrepreneurs or as a business people, ensure that you have records on your income and expenses. Even any donation you get, keep track of it. Ensure that you record it. And I've said, be it in Excel, that is the simplest tool you can use in putting your accounting records. We have applications. You can download them. They can assist you. But Excel is the simplest, which can help you in recording your accounting information. So basically, you can see on your screen the definition of accounting. It is a systematic process of recording and reporting the financial position of a business, right? And remember, there are these terms which we saw at the beginning. I didn't describe them at the beginning because we were to have them in the presentation. A financial manager is the person in charge of a business financial planning, funding, and accounting. So I understand at one level or the other, as an entrepreneur, you must be a financial manager, right? And for you to be a good financial manager, you must be financial literate, right? And financial literacy is not all about having a knowledge about finance. You can have knowledge about finance, but you're not financial literate. You must have that information and use that information to make sound judgments or sound decisions to be able to make change in your business. And it must be a positive change, right? So being a financial literate is not about having that knowledge. It's for you to have that knowledge, use that knowledge in making decision making, and those decisions which you are making, they are not just going to be decisions. They are supposed to be very good decisions and positive decisions to be able to make a positive impact in your organization. So if it's not a positive impact in your organization, then you are wrong. You are financial literate if you have those three aspects. So again, here in financial management, financial manager, you're supposed to have this planning. You're supposed to be in charge of funding and also accounting, right? And we're going to see the importance and function of the financial manager. And why am I talking about the function of a financial manager? As I've said, most of you here are going to be entrepreneurs. And most of the entrepreneurs, they start as financial managers. You become the boss of everything in your entrepreneurship business. So that's the reason why I'm touching about financial manager, because you are going to be a financial manager at one point or the other. So the first thing is managing funds and make sure that you meet the financial obligations. You are supposed to make sound decisions to make sure that the financial obligations are met, right? And as entrepreneurs, ensure that when you're having your businesses, ensure that you separate business as a person and you as a person, right? So for instance, cum, if you have your own business, cum, if you're operating as cum, let it be cum. If you're operating your business, let it be your business, right? If it's finances, don't mix the business finances and your personal finances. Let us separate the business finances and your personal finances, right? This one will help us manage our fund easily. And we're able to know how much is coming from my business and how much is my personal finances. And this has to be clear. If your business is not doing well, you can chip in some fund in the business. And it means your business has borrowed money from you. And you have to record that yes, it can be a loan, you've loaned your business, or it can be a donation, but don't mix. So if it's money you are channeling it to your business, let it be in your records as either donation or as a loan. And this will help us manage the fund easily. The next one is finding resources for additional funds. So after doing your budgets and after doing your income vis-a-vis your expenditure, you'll find out that there is some deficit, right? And if there is some deficit, it is the work of the financial manager to find resources which will help you have these additional funds in your business, right? The next one is planning long and short-term financial goals, right? So all these, they're the work of the finance manager. And if you may allow me, we've talked a lot. If you may allow me, we go to budgeting. I introduce budgeting, an overview of budgeting, what budgeting is all about. Then tomorrow, we work on budgeting, right? So this is the definition of budget. A budget is a written plan of what you expect your income and expenses to be over a certain period of time. Anyone with any other kind, the next session is on Thursday, not tomorrow, on Thursday. Anyone with another definition of budgeting or budget, because we do have several definitions of budgets. Anyone? Anyone? A forecast of income and expenses, yes. Is Alpha in? Alpha maybe? Alpha? Akelo Harriet? Efichao? Anyone? It's an estimation of expenditure and income over a given time. What is in the screen? Anyone? An amount earmarked for something, an estimate of income and expenditure for a set period of time, annual budget. We do have annual budgets. We have semi-annual budgets. What you spend, yes. Anyone? So I can continue income vis-a-vis the expenses. So I'll proceed. So we do have three main types of budgets. We have the startup budget, we do have cash budget, and we do have operating budget, right? These are the three main types of budget. So a startup budget, as you've said, budgeting is all about the plan for income and expenditure, right? And a startup budget is a plan for the income and expenditure when you start your business, right? And this one mainly includes the equipment, supplies, rents, salaries, and all that. So this is the kind of the startup budget, the one which you're supposed to start it, right? So whatever is written there is correct. As an entrepreneur, there is that chart or there is that flow whereby there is that graph basically, whereby as the business starts, don't expect to make profit immediately. It will go like a plateau. It increase, right? The income and the profit increase. Then it will reach somewhere where it will stagnate, drops, and again come back on top. So when you're making a startup business, you're supposed to come with a plan on how you're going to cover the expenses, the startup business expenses. Because for the first year, trust me, you'll have a lot of expenses as compared to the income, right? So as a business person, expect the first year you have a deficit. So don't feel bad when you're starting your business and you find out that you are having a deficit budget. However, note that you're supposed to project. So even if you're expecting not to make profit, as a business person, the aim of a business is to make profit. You're supposed to project to make a profit. Then at the end of the year, when you're doing your follow-up and compare what you've done for the whole of the year, if you find you have a deficit, an overspending of your budget, it's okay. Because as I've said, this is a guide. It's just a roadmap to ensure that you achieve the end result, which is your goal. The second one is cash budget, right? And this is a budget which deals with the actual money, which you spend on a bit daily, weekly, monthly, or yearly basis, right? And operating budget is a plan on how much you expect to spend and earn over a given period of time. And usually this one is long term. And mostly we are going to concentrate on the first budget and the last budget, the operating budget, right? And for my lesson, I usually like it to be very interactive. That's why I don't want you guys to be bored. I don't want you guys to sleep. I don't want you guys to be dizzy. So that's why I try as much as possible to engage you. So if I mention your name, don't feel offended. I'm trying as much as possible to make sure that this lesson is interactive as much as possible. So we have this question. What are some of the expenses a startup budget includes? Anyone, you can share in the chat box. And you can share answers for the two questions, the expense for the startup budget and the difference between cash budget and operating budget. You can type on the chat box. We do have assets, yes. Rent, yes. Business registration, yes. These are the kind most important. Business registration, the legal fees, yes. Business licenses, yes. The domain and hosting, if you're going to be online. Salaries, yes. Very correct. Marketing, furniture, all that. And what is the main difference? The main difference between cash budget and operating budget. Cost of production and development, that one is for the first one. And remember budgeting, let me bring it to speed. budgeting is all about habit formation. So try as much as possible when you're setting your budget, you stick to it. You can have plus or minus 2. You can over or under expend it, but let it be a habit formation. So that when you get some funds and you have items in your budget, the first priority is to make sure you go for the expenses item in the budget. So note that budgeting is all about habit formation. Yes. And if you have this kind of budget formation or habit formation on budgeting, it will scare away the guesswork in financial decision. So if you have a budget, trust me, you won't have any guesswork in your financial decision, because already you have everything. You focused, you've done, you are focused on income, you've done your focus on expenses. So it means you know the goal you are going to achieve with these finances and expenses. So you're going to make good decisions in each stage of your life or each stage in developing your business, right? Startup budget expenses, we have rent, company registration cost, transport service, and equipment cost. Very true. Anyone? I've not seen the answer on the what is the main difference. Any answer on the main difference? Time frame, yeah, true. Time frame, it differs. Cash budget is short term as compared to operating budget. Operating budget is long term. Anyone else? Yes? So just a recap of what we've talked today. If you've noticed, we've talked about some 6 or 5 things. I'll take you back there, here. These are the major things we are talking about, right? Setting your goals, knowing the importance or knowing the needs and wants, that is the assets, right? So setting your goals, knowing your wants and needs, having the forecast, right? Knowing your income, knowing your expenses, and now setting the spending plan, which is the budget. And remember, as I've said, after that, ensure that you stick to the spending plan. Right? A quick reminder. Remember, I've given you guys an assignment, or remember that we have an exercise we are doing together whereby you're supposed to set your goals, know the vehicles, 3 goals, that is, and you're supposed to know the vehicles, that is the assets, which they're supposed to help you attain your goals. All right? Again, the next stage, financial analysis. Then you're supposed now to come up with your projected income. The next one is your projected expenditure to enable us now to come up with a budget, right? Any question? I'll proceed to the financial records, which I talked about. And remember, we've said that it's very important for you to keep records, especially financial records, right? If you're paying salary to your workers, ensure that you put that record, right? And it has to be accurate. And this will help you track your plan and also know if you're achieving something out of your plan, right? So we can have your records. They can be placed or they can be recorded in a yearly, monthly, depending with you on how you record your account. And remember, if your accounting period is for a year, meaning that you review your accounting records on a yearly basis, it means that is a fiscal year. That is the definition of the fiscal year. And as I've said, we have several softwares and programs which they can help you have this kind of financial records and help you in planning, right? Right? So ensure that you maximize these applications or softwares. And I've said, if you're not able to buy or you're not able to cover or you're not able to buy these softwares or application, you can go for the simplest one, which is Excel, right? Right? So these are accounting records. They keep track of money coming in and going out of your business. Basically, that is what the accounting records do for you. So ensure that you keep records. And remember, even if you're keeping records in Excel, ensure that you have your manual file, a backup, be it a backup or you scan them. You can scan them and put them in a folder somewhere in your machine and make sure you have a backup in case your machine crash, or ensure that you have a file, be it in your office or your home. So this is all about keeping the financial records. It's one of the important things. They saw transaction to show what your business owns, right? So you're able to know at the end of the day, and for planning purposes, if you have these records and you're seeing my salary for the last year, I've been paying my people 1 million Kenya shillings for the last 1 year. By virtue that you have these financial records, it's easy for you to be able to project these expenses in future. So for instance, you know you are paying 10,000 shillings per month, and the assumption is you are going to give a 10% increase or a 5% increase to your workers based on the inflation. So this will also help you be able to project this kind of expenses. The same, you know, electricity. You've been spending electricity 1,000 shillings per month, but based on the number of activities in the office have increased, you're going to project an increase of 5%. So these accounting records, they also assist you make projection in your business, right? So when you're making your accounting records, you can separate them and have the liabilities on one side. And as you know, any amount of money your business owes is a liability, right? So maybe you've not paid your salaries for maybe 2 months, that's a liability. Your workers, they're supposed to go on leave. The leave days, it's a liability. Because remember, if they retire or they resign today, you're supposed to compensate them the leave days, the accrued leave days. So the leave days, the accrued leave days is a liability in a business. So ensure that if your organization or your business, you give your people leave, ensure that they go for leave or they go on leave. And this will reduce your liabilities. Because as a business, we are going to quantify these leave days, or we are going to make them, how much do they relate to their salaries, and make sure these are liabilities, right? Again, if you buy something on credit, again, it's a liability. Right? Any debts you owe bank or investors are also claims against the assets of your business, and their claims is called the owner's equity. Right? So the relationship between companies' assets and the claim against those assets is expressed in this equation. Most of you are aware of this formula. Assets is equal to liabilities plus owner's equity, which is capital, right? So liabilities plus owner's equity will give you the assets. So I'll take you through a few financial records, and one of them is income statements. An income statement is generally a report which shows the net income or loss over an accounting period, be it 1 year, half month, or a quarter. So this one, income statement, basically it gives you a report on how you've been operating, right? So if your revenue automatically is greater than the expenses, it means you have you have a net income. And if your expenses are higher, of course, you'll have a loss if they're higher than your revenue. This is just basic business. I think most of you are aware of this. You've learned business in high school or in campus. Someone is aware of balance sheets. Anyone who can give us a definition of what a balance sheet is all about, or what is a balance sheet? Anyone? Anyone who can give us a brief description of what a balance sheet is all about? Balance sheet shows the financial position of the business. Yes. I've not heard from Abdul Koroma. Abdul, are you in? Chat something. Cliffon went off. Is Cliffon in? Paul is saying documents showing business stand in terms of liability and assets. Yes. Chao, are you in? Chifue, yes, you are in. Say something, Chifue, you are silent. So basically, a balance sheet is a report of the financial state of your business on a certain date. And it reports on assets, liabilities, and capital, right? So on the left side of the balance sheet, you list all your assets. And on the right side of the balance sheet, you list your liability and your capital or equity. I'll interchangeably use the word equity and capital, right? So tomorrow, or sorry, on Thursday, we are going to have the whole session on preparing a budget, right? And as we said, budget is a written document, plan on what you expect as income and expense over a period of time. So we have this kind of assessment on which you can do it at your own time, but we'll review it on Friday. So we have revenue, we have profits, we have loans and credits, and owner's equity. These are some of sources of funds, right? So I want you to give me a brief explanation or how you are going to use the revenues. So how are you going to use the revenues? How are you going to use the profits? How are you going to use the loans and credits? And lastly, how are you going to use your capital? Yes? So to finish up on today's lesson, I want to recap on how to make ethical decisions. And in what ways is a non-profit like a business? What is a non-profit making organization looking like? Secondly, what can an accountant provide for a non-profit than a volunteer cannot? So an accountant and a volunteer, what can an accountant provide for in a non-profit making organization as compared to a volunteer? Right? Again, what ethical question arise when a volunteer is a treasurer for a non-profit making organization? These are I'm trying to give you this question so that you can expound your mind. Because I understand most of you're going to start your own kind of business. It can be non-profit making organization. And to cut costs, you can have a volunteer who can come. And the question arises, if a volunteer is doing the accountant job, what are some of the challenges? What are some of ethical questions? Can a volunteer work independently in an organization as compared to a person, an accountant, or a person who has been employed full-time? So these are some of ethical questions which you must ask your question to enable you make some decision in your business. How would you tactically convince a volunteer to step down from his or her role as a treasurer from a non-profit making organization? Right? And are there other roles that a volunteer treasurer can fulfill in a non-profit organization? Right? Any question? Any question?
So there are questions in the Q&A. I would like to read them and then see which ones you haven't answered yet. So the first one is from Anna. Okay, thank you. The first one is from an anonymous attendee. Please, can you explain the difference between financial forecast and projected income or projected expenses? I'm not sure if you answered this one.
Pardon, come again, projected?
Please, can you explain the difference between financial forecast and projected income or projected expenses? That's the first one. The second one, in doing research on prices for assets, what do we prioritize, price or quality? It's coming from Kum Charlotte, I think that's the name. The third one is, what is the role of an accountant in a business? What is the difference between a bazaar and an accountant? And then an estimation of income. Okay, sorry, those are contributions. So those are the questions that we have in the Q&A.
Okay.
Do you want me to read them through?
I think I've gotten the three questions. The first one is the difference between financial forecasting. That is the difference, if there is any difference between financial forecasting and projected income and expenses. Is that correct?
Yes, please. So yes, the financial forecast and projected income or projected expenses.
Yeah, financial forecast, basically, it is, you can have it in two ways. In financial forecasting, it includes projected income and expenses, right? Because for you to forecast your financial, you are supposed to have your income and expenses. But financial forecast involve other activities, not only income and expenditure. For your financial forecast to happen, you're supposed to do market research. You're supposed to do research on the item you're having. And this one will also, financial forecast will also assist you in decision making. So financial forecast is, it is an umbrella which incorporates income, expenditures, research, and all those activities which makes you make best financial decisions. So financial forecast is the umbrella. We can say it's the mother. So in the financial forecast, you can have forecasting, projecting your income. You can have projecting your expenses. You can have the issue of research. You can have the issue on market research, how you're going to set up your business. So it involves all those aspects. So income, projecting income and expenses is part of the financial forecasting, right? Then the second question was, when you are doing your research on the prices for assets, will you go for pricing or quality? For my side, I'll tell you, you go for the quality. But as you go for the quality, compare the quality. You can have item, let's say you can have furniture. The furniture in shop A is the same quality as furniture in shop B. They have the same quality, the same specification in shop A and in shop B. But it is cheaper in shop B as compared to shop A. So the first thing you go is for the quality. Is the quality the same? And if the quality is the same, then the next thing is price. What is the price between the same item of the same quality between shop A, B, and C? Because if you only go for price and you don't go for quality, trust me, in the long run, you will spend more than the cost of the quality item. I can give you an example. Assume you brought a substandard chair. The chair is costing, let's say, $50. All right? So you go for this $50 for a substandard chair. The quality chair costs, let's say, 100. That is the double price, $100. You go with that chair to your office. With it 1 or 2 months, it's broken. What will you do? You either repair it at a cost or buy another substandard chair at a cost, or alternatively, now go to the quality chair at a cost. So as much as possible, you have limited resources. That is, you have limited capital. Try as much as possible, you go for the quality. The most important thing is quality. Then after quality, look for the prices, right? Then the last question is about the role of accountant vis-a-vis bursar. I can say a bursar is just like a treasurer. A treasurer, you have a basic accounting knowledge. And we see mostly colleges and they usually say in high schools, they have a bursar. Because a bursar is just doing the normal bookkeeping. They're just the basic bookkeeping function. But an accountant is more than that. An accountant can prepare the book, not only keeping the records, the accountant is able to have the financial records. He can generate the balance sheets, he can generate all those financial records, and And an accountant can also account very well. And most of accountants, an accountant, from the word accountant, you are accountable. You see, you're accountable. And it means you are able to say, yes, we are supposed to do purchasing A, B, C. But for the bursar or a treasurer, for you, it's just a guide. You're just a guide to say. So that is what, from my perspective, I can say the difference role between an accountant or a bursar. However, you might find out in some organization, they also call the accountant bursars. MACU, accountant, for you to practice accountant, for instance, in Kenya, you must be registered by the accountancy board. For instance, in Kenya, it is ISPAC. But for bursar, let me repeat, for the accountant, for you to do accountant's kind of work, you must be registered with the accountancy board. And if you do any fishy thing in accounting, you will be liable charged with that accountancy board. Know that accountability in his or her part. I think that's what I can say. Any other question?
No other questions in both the chat and the Q&A. So I think we've gone a bit over time. We can end here. If anyone else has clarifications, questions, and comments, we could reserve them for Thursday for part 2. Mr. Fulgence is going to lead us into part 2 as well. At this point, we want to end the webinar. Want to thank you. Yes, please.
Phoebe.
Yes, I can hear you.
It's Phoebe.
Yes, you are. Yes,
yeah,
please.
Okay. Just, I don't know if you have a class representative or a class leader.
What did you need?
Maybe for compilation, maybe in case anyone from the team or from the scholars who have questions or clarifications or something which he wants us to cover in the next lesson, he can share with the team leader. Then it can be submitted for me tomorrow, so that when I'm preparing on the Thursday lesson, I'm able to cover all those questions and also be able to cover something which I was not planning to cover and incorporate it in the lesson.
Sure. So we have a WhatsApp group for all participants and attendees. So I'll also reiterate on the group that everyone who has extra things they want you to cover to post on the group, I can collect that and then forward it to you as well.
Okay,
does that work?
Yeah, that's in order.
Okay.
Yeah.
All right. Thank you so much for your time, Mr. Fulgence. Thank you so much for the excellent presentation. We'll end here. I want to also thank you for everyone who stayed from beginning to end. And and thank you for being interactive. And then I will see you on Thursday. I will also send the resources on the group, both the WhatsApp and the Facebook, but I'll also send through the communication I just did on whether you have extra requests for the lesson for Thursday. I'll send that on the group as well. All right. Okay. Thank you so much. Have a great evening. Yes.
Thank you and bye for now.
All right. Bye.